Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is the one and only commodity investing legend and the founder of Rule Investment Media, Rick Rule. Welcome back, sir.
Thank you, Ivan. Pleasure to be on with you.
Yeah, it's a pleasure having you come down to Wall Street Silver. I want to get you on to talk about all the craziness that's happening in the world, silver and gold. First, let's start off with, what are your thoughts, I guess, on the current trends in the gold and silver markets, and how do you see these trends evolving over the next year?
You know what amuses me, Ivan, to see all the online hand-wringing about the recent decline in the gold price and the silver price.
Right.
One needs to ask oneself in the last 12 months, is the gold price up $600 or down $200? Um,
It's up.
I guess because I'm so old and I've seen this so many more times than other people. Day-to-day moves, week-to-week moves in the gold price and the silver price don't matter to me a bit. They're absolutely, positively irrelevant. I think once on your show, I don't know if you remember this, but we were responding to some of your listeners' comments, and somebody was saying, "When is the gold price going to move?" And I said, well, I guess it's going to move in the year 2000. But since 2000, it's gone from $253 to 25, 26, 27.
Right.
Uh, People are very, very, very odd. They often invest in long-term narratives and then they employ short-term tactics.
Right.
If you're investing in a 3 to 5 year scenario and you have trouble holding a metal or a stock over a long weekend, it's likely that it's not going to have a happy ending for you. I feel extremely constructive towards the gold price, longer term towards the silver price. The consequence of that is I feel extremely constructive towards a carefully selected package of precious metals equities. Uh, it's tough to be more bullish than I am,
Right.
but I guess that 71 years on Earth has given me a perspective, oddly, that's longer than the perspectives of people who have more time left.
That's true. And I guess the a lot of people on online their main focus, I guess, is why is there such a difference? Like you have $2,700 gold, and then I guess the mining industry or the silver and gold mining companies are not moving along with the actual gold and silver price. What do you see there, Rick? What's the
They
explanation?
are. The companies that have performed, I mean, the companies that have performed as companies, not in the market, have
Right.
been well regarded. Wheaton Precious, a great big company,
Right.
up 50%. Agnico Eagle, a great big company, up 60%. A basket of the Silver Juniors since the time that you and I interviewed last December. I don't mean, Silver Salamander or Silver Mosquito or Consolidated Silver Scam. I
Right.
mean the real ones.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. Is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use, so that instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
They're uniformly up 250 or 300%. Now,
Wow.
admittedly, they were grossly oversold in November or December. But when people say that the gold and silver stocks haven't moved, I'm sort of wondering what it was they owned.
Mm.
Newmont hasn't moved. Well, actually, Newmont did move. It just moved back down. But they forgot to perform. Barrick hasn't moved. They forgot to perform. The companies that have performed have had sterling moves. Even the exploration companies. Surprise, surprise. If you want your stock to go up and you're an exploration company, it really helps to have a good drill hole.
That's
It
true.
really helps to have a discovery. Um, so I'm a little baffled. Now, I will say that the universe for gold and silver equity investors is small,
Yeah,
much smaller than it used to be. It deserves to be small because the industry as an industry has underperformed.
right.
We've talked about this before, Ivan, but if
Yeah.
you take back to the decade 2000 to 2010, the gold price increased from what, $250 to 1700,
Wow, that's
something like
incredible.
that. And the
Yeah.
free cash flow per share of the XAU declined.
That doesn't make any sense.
It takes real skill to screw up a market where the selling price of your commodity goes up sevenfold, but the industry managed to do that.
Right.
The good news is, I think, twofold. One is that the management teams who caused that to occur were uniformly allowed to pursue other employment opportunities. And two, the institutional investors that are still left are keeping the managers on a much tighter leash. And I don't think that you're going to see, at least for the next 3 or 4 years, the type of wasteful expenditure that occurred then.
Do you think that's what we need to look at as investors of silver and gold? You need to look at the management team. You need to look at what would you look at? I know your wealth of knowledge is incredible for the mining space, but for our new investors for silver and gold, what would they look at for a producer or an explorer?
With the juniors, you look at the people.
Right.
Uh, Beginning investors make the mistake of thinking that exploration is an asset intensive business. It's not. One in 3,000 mineralized anomalies become a mine. Believe me, it's not about the asset. It's about the scientist. It's
Wow.
all about the scientist. So look for a serially successful CEO and look for a CEO that has experience that's related to the task at hand.
Right.
If somebody succeeded in some phase of mining that isn't the one that they're currently employed in, their past success is probably less relevant. Look
Right.
too at how they chose their board of directors and the experience that they have in senior management. In the juniors, it's all about people. In the seniors, it's different. It's about the relationship between net present value and remainder value and long lived reserves versus enterprise value. It's about having a balance sheet and an income statement that are sustainable.
These are for
And for
producers?
companies, I'm sorry?
These are for producers?
Yes.
Okay.
And for companies that have been producers of long duration, the Franco Nevadas of the world, uh, the Agnico Eagles of the world, you have to look at something called recycle ratio. Recycle ratio measures the amount of new net present value in reserves and resources that are added uh, relative to a unit of production existing production. Meaning, if Agnico Eagle sells an ounce of gold, what's their margin on that ounce of gold? And historically, uh, how much by way of reserves can they add by reinvesting that money?
Right.
Is the business sustainable? Um,
That's what you're trying to look for. Sustainability, the team behind it, the past record,
value,
value.
value. Yep. And it's not tough to do. It's in particular not tough to do better than other people because most people don't do it.
Yeah, most investors aren't looking too deep into that, but I guess if you really want to have success, you should be absolutely looking at the team, the value, and I guess what are some of the biggest challenges facing the mining industry right now today, particularly in relation to environmental regulations and sustainability.
Well, I think expectations, well, two things. I think the mining industry's track record is in their way. When
Right,
I came up in the mining industry and the forestry industry, to be honest with you, some of the stuff that we did was despicable,
right.
completely despicable. And so we earned our current reputation. Now, uh, social expectations have probably run too far the wrong way. An example would be the Bingham Canyon copper mine in Utah, the largest copper mine in North America.
Okay.
The state of Utah is imposing water quality standards on them that, in particular, with regards to sulfates, that are more stringent than they require for bottled water.
That doesn't make any sense. How is that even? That's insanity.
I kind of wish I was making this up, but I'm not.
Why
Now,
would they do such a thing?
uh, poor science
Right.
uh, or politics or something.
Right.
That isn't to say that we aren't still making mistakes. The pad failure at Victoria in the Yukon. Um, we can't have that. Uh, these things have to be at least properly engineered,
Right.
if not over-engineered. I will be interested in how the postmortem, how the discussion and the discovery around that failure ends up. There are some allegations, which I hope are not true, about improper surface preparation before construction happened.
Hmm.
Um,
That'll
that's
play a big part.
that's a real issue.
Yeah.
Uh, and I hope that those allegations aren't true.
Yeah.
But I look at something else. There's a wonderful copper deposit in Arizona called Resolution,
Hmm.
over 1 billion tons. It's certainly in a disturbed area. It's next door to a copper mine and down the road from another copper mine. There's, highways and railroad tracks, wonderful infrastructure. Uh, the discovery was made when I was a young man.
Wow.
It is now 26 years in permitting. 26 years
Imagine you have your money tied up in there.
in permitting.
Oh,
And, people are beginning to say, why is the mining industry underinvesting in exploration? Well, let's say for fun that you spend $200 million discovering and drilling off a copper deposit, and then 30 years later, you put it
that's
in production. The
that's
net present value of the $200 million that you spent after 30 years is zero.
that's crazy, Rick. That's
It is crazy.
crazy.
It
So
is
how
crazy.
how do they recover that then? They how do you
They
even
don't. I mean, in the case of Resolution, the companies that own it are BHP and Rio.
right?
Uh, they are rich companies, and they are able to stand this foolishness because they make so much money in other deposits.
Wow.
But it does tell you, Ivan, as an investor particularly, that if you own very long-lived existing producing deposits that you don't have to permit, you own something more than you think you own.
Right.
Analysts like me look at a deposit and they value it on a net present value basis. They take the expected cash flow from the deposit off the production schedules.
Hmm.
They look at the costs associated with producing the metal. They look at the revenue stream and then they discount it back to a net present value using a 5% discount, an 8% discount, a
Right.
10%. What you learn about big deposits, great deposits, is three things. The first is that they were always put into production with enough reserves and resources to get their capital back.
Right.
But there's always exploration upside, and it's always good.
What's the
Second,
second?
the second thing is really truly a trick of math, which is to say, after your discount period runs out, after 8 years or whenever you've run out the net present value, you restart the clock at the same number. For a 30-year deposit, just because the discounted net present value runs out in 8 years doesn't mean you don't have 22 years of cash flow to enjoy. So
Right.
you have to assign residual to it, and you have to design a higher residual than you used to because you don't need to permit it again.
Right.
Third thing, and this is really cool. I never understood the benefit of this until I got old, and that is this. While the overall return on capital employed for a big deposit might be 20%, 25%, the residual returns on capital employed in optimization can be huge. You
Really?
spend $5 billion building a great big, copper porphyry or something like that.
Hmm.
And you discover that by tweaking your process circuit, you can get 3 or 4% more recovery.
That's
It might be
huge.
that tweak costs you $40 million after the $5 billion you already spent,
Right.
but that $40 million may make you $40 million a year.
Oh, yeah. So that's big.
Subsequent returns on capital employed for optimization are off the charts big.
That's the residual.
Yeah.
Wow. Well, that's
Uh,
incredible.
Three big, big, big surprises that investors need to pay attention to.
And you only learned that recently.
The third one, yeah, absolutely. I would be talking to various management teams about their budgets, what they plan to do.
Right.
And I remember talking to Ross Beatty as an example, and he went down to Mesquite, one of the mines operated by Equinox,
Hmm.
and he looked at one of their haul trucks, and he said, "That thing belongs in a museum." I mean, this is insane. And on the spot, he authorized like I don't know, 7 million or $8 million. And I said, "What do you think your ROI on that is?" He says, 65, 70% at least.
What?
Yeah. And the same thing can happen with these big shovels, because the trucks he was running around with before, I think they were 45 or 60-ton trucks,
Hmm.
and the new truck is 250 tons.
Oh, a massive difference.
You just move a hell of a lot more material.
Yeah. Wow.
Uh, and that's a really important consideration.
Yeah, that's huge, especially like because you don't know. First, you're just gonna like you're not your average investor is just going to just look at the mine, invest in the mine, the producer, or whatever. But I guess the residual is super important as well.
And Ivan, you need to think about the same thing now in unconventional gas and oil production, in the shales.
Yeah.
A guy will drill a multilateral horizontal well in shales, and these are very, very, very long legs, so they're expensive.
Right.
Maybe the first well that you drill costs you 6 million bucks, right?
Hmm.
And because what you're doing when you fracture the shales is you open up pore spaces, you produce a lot of material very quickly, a lot of oil and gas, and it
Right.
declines very quickly. It's very common that these wells uh, experience 80% declines over a year and a
Wow.
half or 2 years. But what we're learning, I mean, first of all, maybe you recoup the capital to drill a well, you recoup it in 7 or 8 months.
Hmm.
So what you're getting after 7 or 8 months basically comes home.
Yeah, you're recouping it already.
But what you learn, or what we're starting to learn at least in some of the shale basins in the US, is after you've experienced that decline, you go back in and retreat the well.
Okay.
You don't have to re-drill it.
You just
Uh,
retreat the well.
exactly. You
Mhm.
refrac it, you acidize it, do whatever. And while you don't get back up to the original production, you don't get back to the initial production rate.
Right.
You restore 60 or 70% of initial production, go back into the same decline curve, but that retreatment program costs you $500,000 as opposed to $6 million.
Yeah, that's a huge
Yeah.
difference.
Yeah, you're seeing wells in the Eagle Ford now in South Texas that are on their fourth retreatment.
Wow, that's crazy.
The gift that keeps on giving.
Just
I'm not saying they're all going to do it, but I mean, coming to the Montney, coming to the Cardium, coming to a play near you.
yeah, that's incredible. Well, Rick, it's such a huge pleasure you having you come down to Wall Street Silver. Before you leave, though, I'd love everyone to connect with you. Where can people connect with you? I'll put the links in the description below.
Two places. You can connect with me around natural resource stocks at my website, ruleinvestmentmedia.com, and I'll personalize it. If you go there and list your natural resource stocks, I will, for free, no obligations, rank them 1 to 10, one being best, 10 being worst. Be a little patient. I go to the New Orleans conference next week, so I'm a little behind.
Okay.
Uh, the second thing is look at my shirt. If
Battle Bank.
If you are unhappy with your current bank, uh, consider a new bank. Consider a bank that really truly will battle for better banking. A bank that will pay you interest on your checking account, as an example.
Wow.
A bank that will allow you to save in 20 currencies, not just the US dollar or the Canadian dollar.
Wow.
A bank that, if you own physical gold or silver, considers your physical gold or silver to be good collateral. We will give you a margin loan on your physical gold, silver, platinum, or palladium as long as it's stored in segregated storage. This can't be, Ivan, this can't be stuff you buried in the backyard, right?
I'm burying it all in my backyard and calling your bank. No,
But
no.
at any rate, if you're unhappy with your current bank for any reason, and I don't know anybody who isn't, look up BattleBank, battlebank.com, or at Rural Investment Media, where you see the question and comment section. Just write bank.
Nice. Yeah, I'm gonna put the links in the description below. Everyone, I highly recommend to go. Please connect with Rick. It's such a great wealth of knowledge that he provides for everyone. And thank you so much, Rick, for coming down to Wall Street Silver.
Always a pleasure. I look forward to another invitation. Thank you.
Talk to you soon.